Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Vizsla Copper.
Will copper go parabolic? This is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich in Switzerland. Joining me this morning is Nicole Adshead-Bell, Chair of Hot Chile. Good morning, Nicole. Welcome to Kitco.
Good morning, Paul. Thank you very much for having me.
Pleasure to see you again. Copper, the macro environment for copper continues to be very bullish, but the copper price has languished somewhat this year. What's going on?
I think what's going on is the market, all participants in the market are extremely short-term in terms of their perception. I've drunk the Kool-Aid on copper, so I'm somewhat biased in my view, but I think we're in this perfect supply-demand scenario. Long-term, starting 2025, primary copper supply starts to fall off a cliff, and as we know, mines are taking longer and longer and longer to get permitted and come into production. So inelastic response to supply, and so the incentive price to incentivize new supply needs to be materially higher than what it is today. And so we have this great, I think, longer term investment thesis, but for whatever reason, and I'd say short termism is that reason, the market is not responding to that.
Well, let's put a number on the copper incentive price. We've been at $3.50 a pound for a good couple of years. Going back 12 to 18 months, we were at well over $4 a pound for most of a year. Nothing happened. People talk about $3.50, $4 a pound being the incentive price. Obviously, nothing happened there. What's a more realistic price?
Oh, well, it's possibly not realistic, but I think copper needs to be around $8. I mean, $6 to $8 for me is the price where you'll see corporations willing to take the risk to start investing in copper projects. And as we know, material primary copper supply comes with a very material capex bill. And we are not seeing companies willing to take on that risk in this copper price environment. In fact, the Glencore CEO earlier this year, I think he's actually a leader in the industry. He came out and said, we will not bring on new supply until the market is screaming for it. And the market will be screaming for it when copper price is materially higher.
I love that quote by Gary Nagle. I was listening to the Investor Day when he said that, and also had a little bit of a laugh because he's not able to bring any copper projects on in the near term. All of his things need some further work to be able to get there, but credit for him for trying. But serious point here, the capital cost of new projects. Just in the third quarter results a couple of weeks ago, Teck Resources announced another $600 million increase to the capital cost of QB2, bringing that overall development to 8.6 to $8.8 billion. I believe originally that was a $3.4 billion project. That's huge. What's going on with copper developments?
They're very big projects with a material capex bill that comes with that, number one. We're in a highly inflationary environment, number two, post-COVID, and I think everybody's experiencing that. Corporations are, and the average individual, we're all experiencing the higher cost of living today. I also think we're seeing, and I don't know what the pattern is, but we've seen a number of other companies who can remain unnamed that have also come out with very, very disappointing both capex increases and material delays to their construction projects. So what's causing that? Potentially issues at the senior executive level or how you're managing your business. And so I find it somewhat astonishing to understand or to delve into, and I think this is interesting, and companies need to have postmortems as to how did we get to have such a material blowout? Why didn't we figure this was happening? Why didn't we put mechanisms in place to try and control that earlier on? And so I also think management of the business is an issue as well.
Teck Resources retired their COO, so maybe one of the reasons they can't do that is because they fire the people that they think are responsible for that. So there's no one left to tell them what went wrong.
Yes, if I was the board and the chairman of the board, I'd be having a very detailed conversation as to understand what went wrong. And we live in a world, and it's human nature, when there's bad news, there's a tendency to try and hide it or cover it up. And now business for me, the key is understanding in the very early stages where things get wrong, starting to go wrong, because a day becomes a week, becomes a month, becomes a year, and 100 million becomes 200 million, becomes a billion, and so on and so forth. And so how do you have the right people that you have the confidence that are communicating and escalating early issues up the food chain? I think with large companies, there's a I don't want to say it's not a laziness, but it's a comfort that comes with being a larger company versus being a smaller company where you have limited people, limited balance sheet. If you get it wrong, you cease to exist. And so maybe there's a discipline element or a rigor that is not occurring at the larger company just for the sake because you are larger and you can sometimes be more focused on process versus productivity. I think there's a lot of elements that come into these kind of capital blowouts and delays.
Well, one other thing I see coming out of this is the following. You've always had capital risk. You've always had execution risk. Depending where you are, you've had country risk. But now with some of these things, we're starting to see executive risk where the possibility or probability of a capital blowout and the fact you're going to lose your job perhaps means a lot of these corporate executives are going to be reluctant to take the decision to build projects because they've got their own career self-preservation at stake as well.
Absolutely. At the end of the day, corporations are run by people and people are focused on their own self-interest as much as we would like to think that they're not. And so I think that seeing this happen means that other executives and potentially boards, because at the end of the day, boards will be somewhat be considered to be at fault as well, will be more and more hesitant to take decisions on big capex projects. Ironically, all that does is increase the talkiness of the underlying commodity price, because the more that we stretch the supply side in a negative fashion, and we're doing that and we're continuing to do that, the more companies defer making decisions on big capital projects and not just new builds but expansion, the better the situation it is, ironically, for the copper price in the long term.
Where do investors sit in all this? Do these things scare away investors?
Absolutely. I think investors, we're not in an environment where investors are really willing to take on risk. In our world, the resource world, you're hearing about a lot of redemptions of funds, the primary source of capital inflow for those that aren't generating positive cash flow. There's a risk-off perception in mining, and events like this just reinforce this preconception about the risk of mining. And again, ironically, as hard as that is to go through in a cycle, and particularly if you're a junior that needs equity performance, hopefully to attract new capital and to fund your business, again, it's very, very positive for the long term. But this just reinforces this high-risk perception of what mining is.
Now, Hot Chile's got the Costa Fuego project in Chile. Before we talk specifically about the project, let's talk a little about Chile. The government there seems to have been moderating its position with every passing quarter vis-a-vis the mining sector. That's my perception, at least. What's your perception of what's happening on the ground in Chile?
Agree, confirmation bias. And what's interesting to me is when there was a lot of negativity about what the government's plans were for the mining sector, that was constantly in the news and in the global news. And more recently, there's been a very positive shift in terms of being an understanding, I think, of how important mining is to the economy, a more reasonableness in terms of the approach to the mining sector. And ironically, that positive news isn't being promulgated in the general market. You don't have Bloomberg coming out and saying, oh, there's something positive that's happening in Chile. And so I think some of that positive direction is maybe underappreciated by the general market. So yes, absolutely, again, somewhat biased, but things are moving in the right direction in Chile.
Well, I think there's so much heartache in the world that nothing's making it through the news headlines. That's
very true. Very, very true.
Okay, well, let's talk about Costa Fuego. Now, you talked earlier in the conversation, there's a shortage of copper supply coming through. The projects just aren't getting built. Hot Chile, you've got Costa Fuego. That's a development stage project in Chile. Whereabouts is it? Whereabouts is it on the development curve?
On the development curve, it's completed a PA earlier this year, and probably versus many of its peers, we released the PA and the share price responded very, very positively. Often when you get into the development cycle in our sector, you don't have the positive share price performance, and I think there was two things that helped increase the profile and maybe the positive share price response. An investment by Cisco Royalties at the asset level, a royalty investment, and somewhat uniquely, we have a buyback clause for 50% in the event of a change change of control. So we were focused on, obviously we think we're undervalued. Everybody says that they're undervalued. It's impossible for us all to be undervalued, but we were focused on ways to fund the business without diluting our existing shareholders into nothingness. And we think we did that quite successfully, very, very positive response. And I think brought a new set of eyes to the story. What we're trying to do is manage our business in the context of very uncertain commodity prices. As one of our employees in Chile said, is no water, no project. And that's true, particularly in Chile. And what Costa Fuego has, and this is really down to the long-term view of the management team, 10 years going, water is going to be an exogenous risk. And so we have a water extraction license, we have a marine concession, and that took 8 years to develop. And that in and of itself is worth a material value. I don't think that's reflected in the company's share price. But what that means is that when the market turns and the commodity price turns and we decide to pull that development trigger hard, we can move through the development pathway a lot more quickly than our peers, simply because we have water. And so one of the things that we've been trying to message, it's not just the grade of your deposit. Obviously, you need to have no fatal technical flaws or no fatal economic flaws. It's the developability of your project. And so the company took a step many, many years ago to de-risk that. And I think we'll benefit from that once the cycle turns in the direction that we think and hope that it will.
And to take that point a step further, Nicole, yours is a seawater process. It's not a desalination, so you don't have that capex or risk.
No, and see, one of the questions that we've been getting, the capex is around the 1 billion mark, and for this size of project, that's pretty low, and there's a couple of key reasons for that. The processing responds more favourably to seawater than to desalinated water, so we don't need to build a desalination plant, number one. So that reduces the economic cost materially. The project is around 50 kilometres from the coast, so we're not up in the high Andes, where you're hundreds of kilometres, you need to have a lot of pumping stations to get up to 4,500 metres. The project is at 1,000 metres or less. We also benefit from a wealth of existing infrastructure. It's road accessible. You can work year round. There's abundant power that's been built out into the area. We have we have reserved our place in the electrical infrastructure. In terms of we can meet this focus with some groups of investors on ESG criteria. We can meet the demands because we could theoretically, for example, be 100% renewable given the extraordinary build out in renewable power in the country. So our economic hurdle has been materially decreased by the luxury of location.
Okay, a lot going for the project. What are some of the milestones for 2024?
The milestones are further, we are aware, obviously, that we need to be focused our business on what will generate share price performance, because ultimately, at the end of the day, we have to deal like everybody else does as someone who needs to manage how we ensure that we have capital coming in a more accretive way than a dilutive way. So we're focused on continuing drilling. We have an incredible selection of projects. We've got a lot of exploration upside. So infill drilling, step out drilling. The company's also focused on doing really what it does best, which is adding value on the exploration side, but we also see more opportunities for consolidation. And then materially de-risking the project as we're stepping through those future development milestones to come out with a pre-feasibility study. But what we have, I think, is flexibility and optionality, not just the optionality of our exposure to the underlying commodity price, because we have a very, very large copper resource and a real project, but also optionality and flexibility in how we manage the stages with which we conduct our strategy. So we're very, very aware of these uncertain capital markets, and we want to ensure that we manage our capital expenditure in the appropriate way.
Well, I wish you the best of luck for next year. Nicole, thank you for joining us today.
Thank you very much, Paul.
This is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Copper.